If you're working hard to save your money, then make sure your savings account is working just as hard to grow your money even more. Hey there, I'm Austin from Sale Financial Ed, and today I'm going to talk about 3 awesome high interest savings accounts that are going to grow you lots of interest and help achieve your savings goals even quicker. I remember back when I was a kid and I'd give the teller my little account balance book. Do you remember those? And I would get that big old stamp and it would just be about 1 penny in interest. Rest assured, gone are those days, because with a little bit of research, there's so many more options in savings accounts that can provide you with great interest rates and help save you more money. This video isn't sponsored in any way, by the way. I'm just trying to show you your options for great accounts that Canadians can have. The first account I want to talk about today is the EQ Savings Plus account. It delivers a whopping 2.3%, and that's pretty darn good for a savings account. This account comes with several perks, including 5 free e-transfers, no minimum balance, and to transfer money in and out of the account is also free, which is good. And if you're not really sure about how to set up auto deposits or why they're so great, I have a video up in the card over there, I think, and you should check that out. It'll help you get it set up. So what are the cons? Well, EQ is a completely online Canadian bank. So essentially there's no branches that you can have access to, so if that's what you're into, then maybe this isn't the best option for you. Moreover, they don't offer registered accounts in their savings account. So you can't have a TFSA or an RRSP with it. It means you can only have it as a regular savings account, which is taxable if you get a return of over $10 for that year. So you get 2.3%, but you will likely lose some to taxes. However, if you study a bit of tax stuff or learn about it or have an accountant, they'll be able to help you figure out ways that you can use your OSAP payments or tuition to reduce your tax burden with credits or deductions, and then you'll get that 2.3% anyways. So the second account I want to talk about today is through Oken Financial, which is an actual brick and mortar bank that runs through Ontario, Vancouver, Calgary, and Halifax. Their accounts have no minimum balance, all kinds of free e-transfers, no costs to there, and no fees for transfers in and out. It's essentially a completely free account for you at also 2.3%. If you live in one of the Canadian city centers, then you're set because you can go check out the branch, but they also have a solid, apparently easy to use online banking system as well. And like EQ, the 2.3% is only earned through non-registered accounts, so you can't have your tax-free savings account or your RRSP with it, unfortunately. Next is the Wealthsimple Smart Savings Account. And you might be thinking, wait, but Austin, Wealthsimple's all investing and the markets are right now. And to that I say, relax. It's okay, they have a regular savings account where you can get 2% per year. When the market started declining in October, I bumped my money over into their savings account so I could avoid big losses, which I have, yes. And now I'm sitting pretty earning this 2% per year. Some of the benefits with Wealthsimple is that the app is fantastic and their customer service is equally fantastic, and I use both of them all the time. However, like the other 2 accounts, this savings account is not a registered account, so it is also taxable. Moreover, Wealthsimple is a brokerage, not actually a bank, so you can't use this account as a spending account or anything like that. You can only transfer money into it and out of it and have it invested or not invested. That is the only thing you can do with this kind of account. So each of these accounts, all 3 of them, are CDIC insured, which means that if any of these institutions decided to go out of business, then your money would be protected. And these accounts are all calculated daily and pay monthly. So what that means is if you put any money in at the beginning of the month, that counts every day throughout the whole month and you get paid for that interest at the end of that month. However, inversely, if you put it in at the end of the month, then you won't really notice a bump in your interest until the following month. And you might notice that I didn't mention any of the big banks or any of the banks that you tend to see on billboards, because to me, I find that just a little bit of research on your own time will get you a lot further and a much better account than what you're gonna see directly marketed to you in your face. And I even compared these accounts to some of the other big bank accounts, and there's just no comparison. You'll get a lot further with your savings in one of these accounts. If you're planning on saving for the long term, any 3 of these accounts are gonna serve you well. So that's it for today. Check out the new Sale Financial Ed Instagram account. I've got book recommendations and pretty photos and all kinds of things for you to enjoy there as well. And as always, if this video brought you value, then how about a subscribe, give it a like, click the bell, and drop a comment below if there's anything you want to add, like if you have an awesome bank account. And with that, I will see you next week. Bye.